Welcome to this micro course, providing you with best practice skills and know-how. This session is given to you by the Van Haren Group, your partner to enable best practice learning. With your host, Maurits van der Plas.
Yes, welcome everyone. Welcome to this session, to this micro course about enabling digital banking with data and design. I'm here with Jeremy Bryson. Welcome, Jeremy.
Thank you.
Thank you for being here. So Jeremy is an expert on banking business design, but I think that Jeremy can better explain this himself than I can. Jeremy has loads of experience and is also one of our authors. He's the author of the book Designing the Digital Bank of the Future, here in the screen. And Jeremy, I would say maybe you can elaborate yourself a bit better. And thank you for hosting us, or for being in the session. If anybody has a question, please feel free to ask, to share it in the comments field in the LinkedIn chat, and then I will bring it up in the screen when the time is right. Jeremy, I would say take it away.
Okay, thank you very much. So as you can see from my write-up here, I've got a background in banking with Standard Chartered Bank and Lloyds Banking Group, and in consulting where I've been doing target operating model design and build. My most recent role was with Lloyds Bank, where I was head of business design, and that's where a lot of my skills have been honed around digital banking. Lloyds is the biggest digital bank in the UK and the biggest physical bank as well. So let's move on. Today I'd like to run through what the big picture is in banking and why digital banking is important, what the business case for digital banking is, because as designers we may well have to deal with that, and then go through what an operating model could look like. What is important to do? There's lots of things you could do in creating a digital bank, but there are some real differentiators and it's worth focusing on those. We'll do a bit of a quiz and then we'll talk a bit about data, and then if there's time at the end we'll go into a bit of discussion, if that's okay. So let's see where we get to. The strategic direction for banking is actually really clear. It's all about digital first, cloud computing, a single view of the truth in terms of data, and personalizing offers, and that's in a retail context, but there's an equivalent commercial personalization. Now, if we look at banking at its very highest level, there are fundamentally two sectors. One is around core lending and deposit taking, and one is around payments and distribution. They're about the same size in terms of revenue, but as you can see here on the right of the screen, one is significantly easier to deal with. One is getting a higher return on capital and is less regulated. So that's why we see Google Pay, Apple Pay, that type of thing, and why we don't see Apple Bank, because they're all piling into the payment side of the business at the moment. So established banks have to react to that, and they have to make sure both these big elements of core banking and payments and distribution work together from a digital point of view. What is the business case? Now, there's lots of ways of talking about the business case for digital banking. One of the easiest ways of representing it is through what's called the cost-income ratio, which is the ratio of operating costs to revenue. Typically, a bank will have that at about 50%, meaning for every dollar of revenue, they will incur about 50 cents of a cost. And obviously, the difference between that is the margin. In digital banking, there's significant disruption of that, because the cost to serve is reduced down to about 20 cents per dollar of revenue. So that widens the margin dramatically. Also, on the other side, the income can be protected by going for digital, but in some cases it can also be grown. And there's some factors here that we see that make the difference in each of these cases. So it's really quite important to know how digital banking will disrupt the business case in the industry, because it is quite a significant change to the profit margins that the bank would get through doing these initiatives. Okay, let's look at what the operating model would look like. So the digital transformation and the success in creating an operating model is not just about the technology. It's really important that we understand that technology enables it, but we need to get an operating model that has all of the factors that you see on the right-hand side correct. So technology is there, but it's by no means all of it. And it has and there's very much a need for a holistic, overarching approach. So this can be done at the bank level, at the overall digital bank. It can be done at subject matter level, so like risk, finance, or operations, and it can be done at a micro level as well. Even if you're dealing with a micro level operating model, you need all of these factors that need to be thought through. They're anchored around a business framework, so something the organization wants to achieve. That could be a customer proposition, it could be a new regulatory environment, it could be a cost-cutting initiative, but something that the business wants to achieve. And from that, we can then develop the operating model that creates the digital bank. So this is where designers and architects care about this type of thing. So lots and lots of things can be done, and we would say that everything needs to be designed, everything needs to potentially be redesigned in an established bank, but there are some things that make a big difference. So you can see here 5 topics that, if you get these right, make the business case that I showed you earlier on hum. We'll come on to some further ones in a minute about data that are a bit more specific, but we have to get our personalization right. We have to make sure we know how ecosystems work for the bank. We have to know that we are running an always-on business, which is really important because we're changing the nature of the bank from a batch business to a real-time business. We have to look at sustainability. That's a key initiative at the moment. And because payments is such an important part of the cost base and the revenues that I showed you earlier on, we have to make sure that payments are really slick and effective. Let's look at each of these in turn. So, personalization. Personalization requires us to have a lot of data about our customer, be able to fit them into a series of value strategies where you basically price to look at the revenue you're going to get from that person, determine the treatments, and those can be very different depending on the path that the customer goes down, and also personalizing the experience. So lots around personae development for those of us who are designers, lots around making sure that we flow the customer experience from inception through to outcome. And the regulators care about this a lot as well. They want us to be able to treat customers fairly, make sure that we are looking after their financial well-being, that we're not lending to them when it's inappropriate, that our products are correct for the customer, and that advice is given that is right. So that's a key element that as designers we're probably going to touch on or get really involved in. Ecosystems. So ecosystems are developing at the moment. We have 2 fundamental types, business to customer and business to business. But in that, the bank can have one or more of these 3 roles that we see on the left-hand side. They can be a manufacturer of the product, they can aggregate products together, and they can act as the distributor, and typically the distributor will own the customer relationship. So for example, we can have white labeling of credit cards for certain organizations, which we know does that. We can have aggregators who bring together different products and present them as a different proposition. And then the distributor, as I said, is the bank brand. One of these three will need a banking license, not necessarily all of them, and we'll find that established banks probably do all three of these to varying degrees. But if you think a bit, there will be elements of products that will be outsourced to other organizations if you're a complex bank. And you're looking forward into a customer relationship where you can be part of an ecosystem. So you could be funding the purchase of a car alongside the car manufacturer, operating with the car dealership, that type of thing. Very much important that the designer tracks these ways of doing things and the ecosystem, and also establishes what the role is that the bank will have in all of this. So, right, I mentioned that we had to be always on. I did mean that, but I also temper it slightly with this slide. The world is becoming more real time, but it's not completely real time. So the arrows show here some key aspects of a bank's operations. And the fact that you move from an end of month type of thinking or an end of day type of thinking towards an intraday or towards being always on. So it's not a complete fully real-time business, but we're definitely moving in that direction, and designers need to think about that because it has a big impact on the latency of the operation, how much lag there is in the business cycle that you're trying to get done. So we're thinking about, because digital banking does change this more than anything else. Sustainability, right? Sustainability. That all the assets that a bank will get involved in could be revalued due to environmental reasons. So that could be all the security that is taken, all of the assets backing certain instruments, the bank's own assets, buildings, etc. All will have an impact. And it's worth looking at this because the table on the right shows a typical European bank. And we can see that in terms of the carbon emissions, in terms of tons per year, this is a couple of years old, but it's indicative of what's going on. You've got the own operations, which are quite substantial in this case, the suppliers' operations, and those are typically outsourced data centers, outsourced printing operations, that type of thing. But the real impact is in the funding of our customers and the emissions that they fund. So regulators and governments that are trying to implement sustainable policies look to banks and say, well, you guys are a big influence. We want you to move on this one. We want you to change your lending policies. We want you to prioritize sustainability in your customers and clients, not just in your own operation, because you have a disproportionate impact on the environment. So lots of banks are repositioning their lending, repositioning their customer offerings, repositioning who their customers are in some cases, as well as making their own operations much more efficient. So you will probably, as designers, touch this to varying degrees in your work. It's pervasive now, and we'll be seeing more of this. It's only going in one direction, so one to look out for. And then payments. So I mentioned a moment ago how payments have to be really efficient. If you see on the left-hand side, what has typically grown up in an established bank is a rather, shall we say, pragmatic approach to payments, where you've got lots of different payment gateways for domestic payments, high-value payments, international payments, and they've grown up over time. Progressively, established banks are moving to something on the right where you have a payments factory. You take the payment from any one of the contact points for the customer and you push it through to any one of those payment gateways that I mentioned. This is where some of the fintechs are really coming to the fore, because they've established this operation and it's significantly more efficient than what you see in an established bank. So lots to go for there, both in terms of what we as designers would be able to do to rationalize a solution out, but in terms of the order of magnitude of the impact that I've shown earlier on. So let's do a bit of a quiz. So these are typical layers of an operating model, starting with the proposition. You've then got the organization, the business process, the data and technology underlying it. As designers, which is the most stable of these to look at and use as our anchor in our design work, and which is the most volatile and the one we want to use least, i.e. the least stable? So in the comments, why don't you just write down your thoughts on which you think these are, and I'll give you 30 seconds on that one, please.
Yes, I'll also come in and try to answer the question.
Yeah, good. So which would you build around as the most stable, and which is the least stable in your experience when you're dealing with it?
I would reckon that the infrastructure, it depends how you look at stable. So I guess the stable, if you build an infrastructure, it will, and technology solution, it will be pretty stable, I would assume.
Yeah, maybe.
The
It will be,
customer
but technology develops very quickly. I mean, the technology from 10 years ago is significantly redundant now, isn't it?
We got a first answer here. So it's Dominique suggests data versus customer.
Mm-hmm. Okay, that's a good one.
So I still had to say which one I think is the most stable. I guess the customer is not stable. Organization, not stable. Process, maybe the process is pretty stable. Yeah.
Okay, let me reveal. Let me put you out of your agony. So the most stable thing that you have in the business is the data. Okay. The least stable that you have is the organization design. So if you work for a large bank, I can pretty much guarantee that there will be an organization redesign somewhere in your business once a week. Something's going to change. Okay, people change, organization structure changes, reporting lines will change. It may be dramatic, it may be not so, but it's going to move around. Let's take the example of customer data. So when was the last time a customer's name and address format changed?
Yeah, exactly. That says pretty.
Yeah,
data or information around the customer says pretty stable.
It is.
Maybe they will add a column in time, but like a persona or something, but the rest remains the same.
Exactly. So in the UK, the last time the name and address format changed was in the 1960s when postal codes were introduced across the country. That's pretty good. There's been refinements, and we add data about customer all the time. But typically, you're going to find that this is the best way of designing it. So what that means is, as a designer, when you are dealing with some of those topics I mentioned earlier on, you're going to have to start with what the data looks like and build out in terms of those other dimensions that I showed you in that circle, how they would fit together. And that's why the title of this event is about data and design, not just design on its own, because we need to look at a bit more about data, because it's such an important pivotal anchor point for us. And therefore, it means if we get our data right, we have everything is a good foundation to work from. If our data is poor quality, then we are suffering. And the banking industry is currently dealing with that, both from a regulatory point of view and in terms of the introduction of artificial intelligence and other modeling tools and things like that.
Yeah, so start with the data.
So start with the data. Let's go into that. So if we are going to start with data, we need to introduce some data management practices. We need to manage data as an asset. And there's lots of cliches around this at the moment, but it's becoming clear that data is important and needs to be managed specifically. It needs to have all of these components in place so that you go through a life cycle of taking raw data and you create decision making out of it. You look at reports, you get analysis, and you get some insight and action. So some credit decisions or fraud decisions are outcomes, but you need to make sure that that comes based on the right quality of data. And therefore, underlying the data itself, we need to introduce data management practices around metadata, knowing the lineage of where it came from, what the quality of that data is, how it is discoverable, how it can be accessed, and how we protect it. If we do that at a point in time, that is good, but we also need to set up as designers, set up a data management process to make sure it's continually refined, continually monitored. And lots of banks are spending a lot of money on this at the moment, and you may well be involved in some aspect of that. And as I said, because it's the most stable element, it's worth attention. Now, data can mean anything, and if we look at this particular diagram, data can have a couple of quite different characteristics. It can be very, very stable, or it can be very, very volatile. But it's fundamentally the same thing and needs to be managed as part of a whole. Equally, it can be very raw. So, as I said, name and address is very stable, but is the base data. It can be highly modeled. So, for example, the credit score that we might give a customer to decide if they're eligible for a home loan or a car loan is highly modeled. It goes through a series of models, a series of aggregations. And we can see here that these use cases, there are 8 use cases in this diagram, are they have to fit into an overall framework. And if a data management framework just looks at highly predicted, highly modeled data, which is about reporting, either internal or regulatory, it misses a load of other things. And established banks are very good at compartmentalizing these and having separate solutions. What's needed actually is a continuous solution that allows you to take data to report versus data to mine and apply artificial intelligence to. It's fundamentally the same stuff. It goes through a series of different stages, but fundamentally it needs to be managed as part of a continuum. And that's a really important element. So I said, every company is a software company, which is a Microsoft quote, but now every bank has to be a data management company as well. So there you go. We have to talk about it. Let's talk about artificial intelligence. It's always there. So there are a number of use cases now. There are fundamentally 2 types of artificial intelligence, one of which we see as augmentation. So that is us augmenting our current roles. And that can be all kinds of things. We can see in the examples here that there are lots of sensible use cases around loan applications, investment advice, that type of thing. And that is evolving quite quickly. But what we're also seeing is that the banks are now running out of training data. They don't in a year or two's time, there probably won't be enough training data to train large language models. So what's going to happen, we reckon, is that there will be a series of things called fusion models. Fusion models, which will be smaller models that require specific data sets, much smaller, and they will be topic specific. So a fraud detection model will be coming along, an investment advice model rather than a generic chat GPT type model. And that will start to replace human roles as opposed to augment them, which is what's happening at the moment. And we'll certainly start seeing that in about 2 or 3 years' time. Having said that, we've got experience of what's going on now, and there are 3 fundamentals here. There is the creation of the model itself, so what the use case is, the core operations and the systems are starting to have those embedded. We need the underlying data to be good quality, so garbage in, garbage out applies, as you can imagine. We therefore need to make sure that those data management practices I mentioned earlier on are there. We've got we maintain our operational data, and we also have modeling and analytics data available to us. Now, depending on technology, the latter 2 may be the same. They don't have to be, but a lot of inherited systems at the moment will suggest that they're separate. So you need data to train the models. You need good quality data as input to executed models to get your outcomes. But things that do get forgotten in this environment are around the orchestration of the data and the processes around it. So how do we move the data around effectively? How do we publish it for use? How do we make sure it's part of an ecosystem where data moves between those ecosystem players that I mentioned? It's now becoming fairly evident that creation of the model and using it is a necessary condition, but it's not sufficient for success. We definitely need to make sure that that data is working well and that it is orchestrated and managed well. So that is a key set of 3 things that are needed for success, not just that one. And we'll see that whole thing starts to morph in the next few years. So one to watch. In the meantime, certainly use Chat GPT and Copilot and things like that to augment your roles. And I would say this, wouldn't I? But at the end of the day, all of this requires really good business design. Because if you don't get the business design right, you come up with some of this. I'll just leave you to have a look at that and see what you think of it. I particularly like the Starbucks fan, actually, because someone basically hadn't designed it. They hadn't thought through the design of what was going to happen. And similarly with those pencils, you haven't thought through beyond the initial idea what the consequence would be. So yeah, good design is needed in those areas that I mentioned. The data has to be managed so that you've got that success as well. So I've covered a lot very quickly. Any questions, comments, views, ideas?
Yes, thank you, Jeremy. Thank you for giving this presentation. I really like the input. We work a lot with banking architecture professionals, so I think it's valuable content and context. I think often professionals within their field of industry, you're too much into your work, let's say, to not have to don't step back and see the overall picture. And what you created here was a overall picture, I think. So thank you for providing that. Dominique still gave a comment about the images being hilarious. Yeah, we got Nagis.
I'm very pleased I've entertained you.
Yeah, definitely the Starbucks one indeed is quite good. You do have to read it a few times, and that was visual design. I think that also your comment about how to create that data, for example, making a CRM system. What do you use as initial data? We work with an email address, for example, but nowadays you see that, for example, social profiles and such, you don't always have a email address for a person to create a profile.
Mm-hmm.
So that means a person cannot be in a CRM system if they don't have an email attached. Those are basically, I think they're design errors.
Yes.
Basically, if you Yeah. If you don't consider it.
Yeah, it's worth mentioning about why design is so important. So look around you, look at anything on your desk and not just the laptop in front of you, and you will see that it has been designed. Someone has sat down and said, what is this thing for? What is this pencil needed for? What is this mouse useful for? And they've thought through what it should look like before anything ever gets made. Most things in our world have actually been redesigned as well. You're on the second, third, fourth, fifth version of it, and it's really important to get that design of a bank right, because what's happened with established banks is they've just been designed and built piecemeal, whereas the fintechs, they've had to design it up front, and it'd be interesting to see if they go into that piecemeal mode in the future. As they mature, but we'll have to see. That's a conversation for maybe 10 or 15 years time.
Yeah, exactly. And do you feel, so before you ask a question about what is the stable part and what is the unstable part, what is the most unstable part, the customer or the business? You said, right? The business is the most unstable
it's the
part.
organization, definitely. The customer, the customer's
they're not stable,
needs
but
are,
they
fairly consistent. They will change their customer needs over their life. So, when you're at university, your needs are different to when you're in your 50s. But we can predict that. We can map that overall journey quite well. And the customer doesn't care about the bank. The customer doesn't care about how the bank's organized. They really don't. They only care about the service they're getting. And that's right. That's the priority we should see. So customers can be stable. What they do is hop for different services to different banks. That's their instability. But their requirements are very consistent.
And then you now share the AI component. I'm not sure when you wrote your book, I think AI was not as booming as it is now. It was already there, but I think as we figured, it was not as popular in name, I guess. So AI goes fast and changes quickly. Well, at the same time, is it also slow? Does it also, if you have your data right, I think you're okay. That's the main thing. You can quickly adapt to the different types of AI.
Yeah, so I managed my first machine learning model, which is a subset of AI, in 2015. So it has got a lot of press in the last 2 or 3 years because of the generative nature of artificial intelligence. But
the accessibility, mainly, I think.
Yeah, the underlying science and data management of it has been a subject for 10 years, quite honestly.
Yeah.
But it's now got prominence and it's now making a big difference. It will have a big difference in banking, for the use case I mentioned, healthcare and government, I predict.
Yeah.
Those have been some really important topics to watch. So be prepared for your doctor to be supported by an AI tool in the next year or two, diagnosing anything you may have wrong with you.
Can't wait.
Yeah.
It will really rapid question answering quite fast.
Yes,
if you consult Google as you're answering, you'll die any day.
Yeah, quite. These things are also much more reliable than humans. They don't get tired. They don't need a coffee.
True.
So bear that one in mind.
Yeah, exactly. Well, thank you very much for your time, Jeremy. Really appreciated your elaboration, your presentation. This recording will be available so people can rewatch it and we can leverage in the future. Then we have our outro coming up, and have a good day ahead and weekend.
Okay, thank you very much.
Enjoy your day.
For attending.
Yeah, absolutely. And feel free to maybe resource the book that Jeremy wrote if you want to know more.
And drop me any comments in LinkedIn or on this platform.
Yeah.
Thank you very much for your time.
Thank you. Bye-bye.
Bye-bye.
We at the Van Haren Group believe that organizations can benefit from shared knowledge and experiences, and we try to help them to do so. We are an independent, worldwide recognized content provider in management best practices and standards, well known for its flexibility and years of experience. Our education partners offer specialized training using our books, courseware, e-learnings, and exams, These partners play a crucial role in delivering high-quality education to professionals, leveraging our products to ensure comprehensive and effective learning experiences. At Van Haren Group, we're more than just a publisher. Our unwavering commitment to quality, passion, trust, fairness, and forward-thinking drives everything we do. We are dedicated to empowering professionals and organizations worldwide to achieve their goals and thrive in today's dynamic landscape. Dream, learn, and achieve with Van Haren Group.
Do you want to apply a best practice yourself and maybe leverage our services? Do get in contact with us. We are more than happy to advise how to take the next step.